Coming into the weekend, tensions between Israel and Iran continue to escalate. Obviously, we have now put ourselves into this. Some say in more ways, some say in less. We hit what we'd like to call Iran's assets over the weekend. It all started literally Friday at midnight when we had a couple stealth bombers that left Missouri and were heading one way, and we had decoys that were running the other way. Even the media was caught off guard because they had no idea what was happening. And obviously, if you're going to be dealing with military plans, that might be the best thing to do, is keep the media out of it. Anyway, we went from takeoff to, I believe it was 15 hours later, we dropped bombs on 3 of Israel's areas where they were enriching uranium and allegedly making nuclear devices. And then a turnaround and came back with not a single shot fired on U.S. bombers or U.S. military. Okay, so fast forward. I'm watching Weekend Wall Street. Weekend Wall Street is a way you can get an idea of where the Dow is going to open. This thing was down, I want to say 600-800 points when I looked at it. Could have been more. And throughout Saturday, Sunday, into Sunday night, we went from down 600 or so points to only down 200 points. Coming into this morning, down 100 to break even to now we're actually positive on the day. So what the consensus is that over the weekend, we heard talks of World War III. By the end of the weekend, it was possible that after Iran voted on sealing the Strait of Hormuz, there was an idea that both sides, our side / Israel, Iran, could both come to the table with some kind of leverage which might make for a quicker resolution. That's what the market's telling us. The markets believe this theory as we've come well back and gone from losses this weekend into positive territory today. So I want to go through each chart. I want to show you a little bit more long-term of what we're looking at, and then my idea going forward, not just for the end of this month, but into July and possibly August as well. So we've been talking recently about a V-shaped correction, and you can see it right here on the screen. Let's bring this up so everybody can see it. And I'm talking about from Inauguration Day, roughly, to April 8th, to where we are now. And we are coming very close to that 612.76 high that appears on this chart before over the last week kind of pulling back as nervousness was hitting the markets. And again, remember that adage. I want you to walk away with this, as I'm not even done yet, but I need to say this because I don't want to forget about it, is that, we've been selling the rumor. Looks like we're selling the rumor and buying the news as markets have bounced back from this weekend's news. Here's the other thing. Volatility is actually still low. And in fact, it actually had dropped out. I imagine that if we could look at the VIX over the weekend, that would have shown pretty high volatility, but it has come back. VIX is down a bit today. But again, it's not about today. It's about what happens going forward. So what ends up happening going forward? Okay, there's concerns that Iran is going to retaliate. Obviously, the U.S. has made it has postured to, if you retaliate, you will regret it. We'll see what happens. Time will tell. But, when you look at things like gold has already been in a pullback, has been that sell the rumor, buy the news. The only thing I see that's going on in GLD is that when you look back at April, both price and volatility rose. That got us to these highs around the 319 area. Now, we've since hit that 3 times. We triple topped on GLD. We've had a pullback. But the interesting thing is that back in April, when everyone was buying into it was this mad dash out the door with stocks and running into gold. We're still running into gold. Stocks have come back. The volatility in gold has dropped considerably. I mean, we had volatility. It was almost twice back in April what it is right now. So in April, both price and volatility were up on GLD. In June, prices up, volatility's down. Is there a possible turning point in gold? Again, we need to consider this. But right now, I see that $316.29 resistance area. We crushed through that, and I think we take the retail high in gold that takes us up to new all-time highs, 330, 340. I'm talking about GLD. Take a look at USO. So USO has been buying the rumor and has been buying for some time. Did oil know something? Did it know something back when it was bottoming in both April and in May? We don't know. I believe where oil really started to get its legs moving higher was about the beginning, like the second 2 weeks ago. 2 weeks ago in June, USO gets above 70 for the first time since it was above 70 back earlier this year. We hadn't seen 70 since the beginning of April. So now we're above 70, and all of a sudden, within 2 weeks, we're in the mid 80s, and we're almost at year-to-date highs, which we haven't seen since the middle of January. So oil flips from lows to highs in literally 2 months. Both price and volatility are higher. Price is higher is one thing, but the fact that volatility spikes tells us that oil could be cooling off, that there's too much emotion, there's too much implied, too much greed and too much fear going into the price of oil. And you can see, again, sell the news as oil is down today. When everybody thought, oh, yeah, I saw news items on that closing the Strait of Hormuz was going to cause oil prices to spike 25%. What ends up happening? They were up 2% last night, and now we're down. All right. And then finally, the VIX or VXX. This is the VIX futures. VXX, the highs for the year were back in April when we were pulling back. It had nothing to do with the Middle East. It had very little to do with the Middle East. It had very little to do with Russia and Ukraine. It had everything to do with tariffs. So tariffs are in the rearview mirror. We're not talking about them anymore. A little bit, but not much. Okay? We've gone past the tariffs. We've gone past Russia, Ukraine. We've gone past the No Kings protests. This week, it was Iran. And it seems like the market is now kind of flushing that out. So where do we go from here? All right. I think up. Finally, Bitcoin, which is the biggest risk on asset, did pull back over the weekend. As you can see, here's the lows that occurred back at April 8th at 70, below 75,000. Here's your highs. These are closing highs, 111,722. We now had a little bit of a lower high. We have had a lower low, but we hit the 98,173 Fibonacci resistance, and as of this morning, have crossed above that. And I can see on the back my screen behind me, we're actually higher than we were since I snapped this picture just an hour or so ago. All right. What does this tell me? This tells me that the stock market, we're moving into summer. Summer's good because, again, we have less news. We have less news from private companies. That's good. No news is good news. Wall Street likes no news. If we could dial it down a little bit on the geopolitical events, then I believe we will see new all-time highs for the S&P, new all-time highs for gold, new all-time highs for Bitcoin. So I believe it will be a banner summer for stocks and most assets. So in summary, most people who are trading the 24-hour markets this weekend, I know a few, are kicking themselves today for selling last night, for selling into Sunday night when the markets opened, because we went from talks of World War III to possible resolutions or a quicker possible resolution of peace talks. Now, only time will tell, but the market knows best, and right now the market's predictive theory is saying that the latter is likely to happen. Stocks, gold, and Bitcoin all rebound. Oil moves lower again, highlighting what panic can cause to the emotional trader. Again, if you're up at night and you're watching this stuff, folks, Watch it with a level head. You got to think about the fact that you've got the emotional side, and then you've got the folks that plan, execute, manage. We want to be non-emotional traders. We want to be rules-based traders. And this weekend, if it does anything, it confirms just that.